OpenAI CEO Sam Altman making some headlines this weekend with a blog, hinting that massive corporate investment in artificial intelligence could be about to pay off. One of the key takeaways, Altman says 2025 could be the year AI agents join the workforce and, quote, materially change the output of companies. Joining us now is John Chambers, founder and CEO of JC2 Ventures and CEO of Cisco for 20 years. John, it's great to have you back on the show. I'm going to start right there with you because there were quite a few comments, including those that we just cited from Altman, that got my attention. The fact that he talked about the fact that the company knows how to build AGI as they have traditionally understood it got my attention, too. So after such a strong 2024 from an investor standpoint in expectation and investment into AI, what does 2025 bring from your vantage point?
Well, Morgan, it's a pleasure to be with you again, and 11 years of watching you on CNBC, and John, 15 years of working together on it. When I look at the marketplace, I'm good on market transitions. This is a movie I've seen before. You saw it with the internet, which ushered in a decade of the best productivity we've had in my lifetime, from 1990 to 2000. I think what Sam is alluding to, and by the way, I agree with it, this is when you begin to see the results of AI. I personally think that AI will drive productivity of a well-run company 7 to 10% a year on productivity increases. You all know what that means in terms of earnings. AI will move from something that we kind of read about and we play with to affecting most of us in our daily jobs and our lives by the end of the year. In short, it's going to go mainstream in terms of the direction. I believe it will drive the stock market for this year and candidly for the next decade. And I think he's already thinking what comes afterwards. So I'm in agreement with his principle. And I think you've also seen AI have a huge implications with the U.S. being well positioned, where half of the world's compute power and data centers for this next generation are in the U.S., excluding China. So I think we're very well positioned as a nation on innovation. I think it's going to affect each one of our lives. I'm the optimist here.
When you do talk about what comes afterwards, the fact that you just cited the 1990s, does this feel like a similar cycle to you to the 1990s and the advent of the internet, or is it something different? How much can we hearken from that time period to understand what the next stages and the next phases will be?
Morgan, perfect setup question. It is very similar to the 1990s, except it's going to move at a dramatically different speed. My view is 5 times the speed and 3 times the output or the economic benefit from it. So having been on stage with the president of the U.S. in the 1990s talking about the role the internet would have in our economy and having watched it build that decade of productivity, I think it's very similar to what we see today. You see a president that's focused on how the economy is going to be driven by technology. How do you get efficiencies into the system? You now see CEOs, when they go to Davos here very shortly, they're going to be focused on how do they take AI and bring it to economic outputs and results. And I think those companies that move rapidly here are going to break away. Those that do not will get disrupted and left behind. That will be true of startups, but also very large companies. So I think it's a very similar playbook, just at a faster speed and much higher, much more positive outcomes than even what we saw with the internet. Productivity, think could mean 5 to 7% a year in terms of productivity growth for a company's earnings.